Today we're going to continue our discussion on our 50 pips a day strategy, and we're going to be focused on round numbers. Stay tuned, traders. We'll be right back. Good day, traders. I'm Stacey Burke from Stacey Burke Trading. Last day we went over again our 50 pip strategy. We talked about the big picture, the high and the low of yesterday, the high and the low of today, the importance of those two areas for a lot of institutional orders, stop hunting, pending orders, breakout orders. We talked about the importance of double zero boxes. We're going to go more in depth today about understanding the double zeros and how that can play a big role in predetermining your levels for today's trading session. And afterwards, we're going to go over today's setups on the British pound crosses. We talked about the importance of the opening times in relation to the high and the low of the day and the double zeros, where we're at in terms of our structure, our big picture. And then we talked about, again, just Asia, 8:30 p.m., New York Eastern Standard Time, Europe and London between 2 and 5 a.m., and New York between 8 and 11 a.m., New York Eastern Standard Time. People have been asking me what time zone. There is only one time zone, and I'm talking about using 15-minute candles. New York Eastern Standard Time, 15-minute candles. That's it. And then we talked about looking at things in 12-candle windows, the hour before the equity opens, the hour of the market open, and the hour afterwards. And we talked about 3-hour blocks in terms of how the markets move. So today we're going to go more in depth into the double zeros, and then afterwards we'll look at the last few days, how that would have applied in relation to the high and the low, and then today's market in terms of heading into the Europe-London Open, where we're at in relation to the double zero boxes. Remember the three things that markets do. This is critical. They either break out, they pull back, they fill more orders, and they continue that move. We would call that a trend trade. They break out, they pull back and reverse and move to the other side of the range. We call that a false break reversal. Or they break out and they pull back and they go into a range-bound market. Those are the only three things that markets do. So when we apply that to what we know in relation to the high and the low, if we have a high from yesterday and a low from yesterday, and the market pulls back into consolidation, we can look at a market and say, for example, we were inside of a double zero box. It broke out of that double zero box and went down to the halfway point to 50, rejected that, and pulled back inside of the double zero box into the US close. Now that market at some point may paint a high in Asia, and it may paint a low in Asia, and then go into consolidation as we head into the Europe-London Open. So if we were to draw a split there, and we'll call this 2 a.m. to 5 a.m., what we would look for in this equities open between Europe and London, between 2 a.m. and 5 a.m., is potentially either the market to retest one of these extremes and either stay inside of this 100 pip box. And again, remember, if we look at the real box, we know there's highs and lows, and there's orders outside of both of those highs and lows. If we look at the big picture, do we have any structure? Is there a symmetrical triangle? Is there a head and shoulders? Is there a descending triangle? Are we at the low of the week? Are we at the high of the week? But remembering three things: markets break out, they pull back, and they go into a range-bound market. Or they break out, they pull back, and they reverse to the other side of the range. We call that a false break reversal. Friday night was a classic example of that on a few of the pairs where they ran the highs, stop hunting traders who were short heading into the New York Open, and then reversed all the way back 200 pips plus to stop out traders who were long in the London session. And number one, with the breakout, pullback, and trend, we saw that on the continuation for a second day trade on a lot of the Friday pairs. But again, focusing on the 100 pip boxes gives us an idea of how that market's trading. Is it breaking out of a double zero box and pulling back and consolidating and continuing to the next set of double zeros through 50? Or is it pulling back inside of a range after bouncing off of 50 back inside of a double zero box and trading off the double zeros back to the other side of that box? And number 3, or is it just pulling back inside and staying in a range-bound market? That double zero box can give us an abundance of information, especially as we head into the equity opening times. These extremes, if they are outside of the 100 pip box and the market breaks out through that level, or if it performs some kind of creeping trend back towards, we talked about this in the last video, the anchor points, they may then work the underside of that 100 pip box to break down towards that lower part of the box. Or they may come back for a stop hunt and pull back and work up towards the top of that 100 pip box, clearing orders out up here, and as we saw on Friday, they might even break out through here and pull back before retesting that high. But this double zero box is where we want to focus, because the market around these equity times will either stop hunt one of the extremes to trigger pending orders, and we talked about, again, 3 bursts, 1, 2, 3, and that can occur sometimes over 3 hours, that can occur in 3 bars, that can occur in one big bar that on a smaller time frame had 3 smaller bursts. And again, we're going to get a bit more, we've talked about the different candle patterns. Stop hunt candles typically will be one big straight candle with a wick on the end, often in cases when it's the last blow off of a third push move. But again, today, targeting the double zeros. Now, a few of the comments saying that there's been, I've said this last week, there was 200 plus pips a day, but we're not in normal markets. Today, again, the ASX was down at 8% midway through the session. I think we closed out around 6%. I think we're going to have massive movements on the US markets tonight. That is going to spill over into our currencies. On some of the US pairs, oil has reaching towards new lows again. So again, plenty of volatility in the markets for traders. Number 1, master your skill set. You might be getting 100 pips or more a day right now, but this system, this strategy is duplicatable. Every day we want to be looking at the bigger structure. Is there a geometric pattern there? Head and shoulders, a double top, a 3-touch pattern, a rectangle, something that will give us a measured move target of more than 2 or 3 or 5 times our risk on these trades. We want to focus our energy around the high and the low of the day. Is the market working the high and then shifting? So have they been working the high throughout Asia and not coming back towards the low of the day, or vice versa? Or have they been consolidating in a range-bound market? If they're consolidating, wait for the market to go outside. We want to work on the outsides of those boxes. Is it a breakout and a continuation? Or is it a breakout, false break reversal for a stop hunt or a trend trade back to the other side? Again, focus on these 3 things. Breakout, pullback, trend. Breakout, pullback, false break reversal. Or breakout, pullback, range-bound market. And again, double zeros. Now, I had somebody ask me, how does that apply to the other US cross pairs? For every instrument that you trade, you'll need to identify those levels yourself. Now, I talked about this in the last video. The main reason I only focus on the British pound crosses is that they typically will give me well over 50 pips. At least there is a perfect, amongst the 6 cross pairs, pound Swiss, pound Canadian, pound Aussie, pound New Zealand, pound US, and pound yen, they will typically, on average, give me 1 or 2 perfect trade setups, in most cases, almost every single day. That doesn't mean that I get them every single day, but I'm only looking to trade the ones that match up with my simple criteria. When you learn that you can duplicate this process, and 3-4 days out of the 5, you're getting a really great trade setup, but you really only need 1, and then if you're scaling that and getting it bigger, and sitting back and waiting for the easy setups to come to the screen rather than trying to trade every single move in the market, you realize that it's about trading less and trading bigger. cutting your losses and riding your winners and riding the bigger geometrical patterns for those measured movements. Now, as you've found out in the last few weeks, as we progress towards the end of the week, we will often get bigger and better trades as the market has set up a high and a low of the week. So we're going to look at some examples again today, but again, focus on double zeros. Pay attention to the information that the market is giving us. Is it breaking out and consolidating around a level for a continuation? Is it breaking out and pulling back and then going into a range, a trading range between highs and lows? Or is it pulling back and reversing and going after the other side to hit stops or trend right through that other level? So hopefully you got some value out of today's video, traders. Again, I want to say a huge thank you to everybody for tons of emails. I'm trying to get back through a lot of them. I apologize. Some of those have gone into my spam folder. A lot of great questions and comments. A lot of great feedback. Again, everything I'm trying to provide you is relevant to real-time trading. What's happening, you know, bar by bar in the screen, in live time, against the smart money. Don't let anybody fool you. It's us against them. They're there to take your money. And in the next few months, we are going to have some golden opportunities if you master these simple setups. Now, some people have asked me why I'm not using technical indicators, moving averages. That's up to your discretion. But the simpler I can make this, the simpler my strategy and my understanding of how the markets move, the easier it is for me to execute my trades with a one-bar stop and an asymmetrical risk-reward pattern without any analysis, paralysis, or hesitation, wondering, is that really going up? Is it going down? Are the EMAs up or are they sideways? Is the stochastic up or is it down? Is it trending? Is it not trending? All those little things. These are things that will happen tomorrow, the day after, and every single day after that. I'm going to have a high and a low of the day. I'm going to have highs and lows that will help me determine if there's a bigger structure in place. I'm going to have double zeros and 50s. I'm going to have opening times of when those markets are going to open. When those banks go to work, when the smart money goes to work, that's when the markets are going to move. So when they go to work, I want to piggyback on what they're doing and ride it out. And that's how we have to think. Trading everything, trying to trade every single move, there are some great trades. Typically in Asia, I will look at Monday mornings and Friday mornings because those are the two main times if they're going to make big moves on thin volume. If you notice, most flash crashes occur on a Monday before the Asian market is even open. I wonder why that is. So have a think about things. Let's take a look at some examples. Again, thank you for the comments. Thank you for hitting the like button. And thank you for sharing this video. I've had a lot of people contact me from other sites asking me if they can use my material. And again, I'm just going to keep trying to provide real life content day to day that in the markets that I'm trading. The other thing I wanted to mention was this is a repeatable process. A few people have asked me for advanced information, smaller time frames. It's simple. The same thing applies every single day. We will go over the same things every single day. It's about mastering your skills in live time and getting better, trading bigger, trading less, but trading those same simple setups, market opens, double zeros, breakouts, false break reversals, and range-bound markets. Master that and you'll be set. So let's take a look at some examples. Stay disciplined, stay focused, and keep getting better.
Good day, traders. Just continuing our discussion today, our 50 pip strategy, and looking at the importance of the round numbers and how that can help us to determine our levels when we correlate that with the high and the low of the day. One of the things that is powerful when you're looking at these charts, for example, if we take a look at the pound yen, we look at Friday's trade, we have Thursday's high, we have the low of the day heading into the London end of the London hour, a few hours into before the market finally broke out. We had a geometrical structure from Thursday. And when Asia printed, immediately we had a pin at the end of the US session. The market broke down below the double zero box for a second tap to the low on top of the ascending triangle pattern that we had identified for the breakout trade. But that market immediately came back and came back inside of the 00 box before consolidating. And if we look at this, was a 200 pip box that had gone 50 pips above and 50 pips below. So we have a 200 pip box inside of 00s, but the market went up in Asia and consolidated at the midpoint at the lower part of the 00 box. And heading into the Europe London Open, that market broke through the new high of the day, pulled back off of the 00s before resuming its upward drive up through Thursday's high, clearing that out. So again, we talked about the three things that markets do. They break out, they pull back, and they fill more orders and continue. We saw the same thing happen on Friday: breakout, pull back, fill more orders, and continue. That market then headed into the US Open, making new highs at the top of a 00 box before pulling back to the bottom of that 00 box and then falling another 50 pips back inside of the high of the day before falling back down to the bottom of the 00 box that stop hunted traders that were long in that pre-US market. Then going sideways in the 50 pip boxes before now finding us here on Monday, and we're consolidated at the lower part of a 100 pip box. Now we have two scenarios here. We have a redrawn high of the day that's above the 00. So if the market was to come up and retest that, we may either see a spike or a breakout pullback continuation. Now the only profitable area that I currently sort of see sitting up here is from Friday night's, we'll just make this green, Friday night's short traders up top. All the other spaces have been filled or stop hunted. And that's where you want to be asking yourself, where is the money? Now, this market has come down, put tails up, engulfment patterns up, and gone sideways. The next place to look is, where is the money down below? And that obviously is from Asia's profitable trades on Friday morning. Now, we may see this market. We've had one push, two push, three push into the Europe-London changeover. If this market was to break this 00 box, we may see that market retest that Asia breakout and perhaps even head lower towards stop hunting any profitable trades in the next 100 pip box down. Now, not to say that that market will go down, but the fact that we've consolidated in the lower half leaves us with two scenarios: a stop hunt low and rise, or a market that rolls over and breaks the low, pulls back, and continues down through these lower 100 pip boxes. We'll just put another green box down below. We know there's profitable traders sitting down in all three of these areas. And as I mentioned earlier, the only other areas for profit currently are the high of the day, Friday's highs, and the short traders from Friday's US session. So again, if we just go back and look at our round numbers on our equity times, we're heading into the Europe-London Open. Asia has been bouncing off of 2800. It's already gone up to the 2900 box and came down. So we have a possible measured move setting up in the downward direction. We would wait for either some engulfment or the market to break out and retest and roll over for the continuation of that move down. One of the things that I've done in this particular last few weeks with the pound New Zealand and pound Australian is I've made my boxes completely 00 boxes because of the volatility. And we see that the market has worked this upper level 3 times today. And as we speak, this market potentially is possibly rolling over and retesting our low of the day. We have profitable traders that are down in this low of the day area. If the market was to fall and retest this 2500 region. The other scenarios, as we see now, we have a 1, 2, 3 setting up. The market may break through and pull back before rolling over. If this market was to reject this 600 level, we would most likely see some more tails come through, stop hunting down this long position at 600 before resuming its upward leg. We have a somewhat of a symmetrical triangle that's forming with 1, 2, 3, 4, 5 touches, which is what we look for. So depending on how this market handles this next hour will determine if we have an opportunity to position ourselves in line with this original drive up. We may see a stop hunt rise, or we may see this market drop down and consolidate and the trend line break. Again, I've taken my 50s off of this chart. As you can see, the volatility has been quite strong. The market had a breakout this morning. It has since come back inside. We'll see with 3 touches, this market may be retesting the low of the day. Pound Aussie, very similar. We have high of the day gone through the 00 box. We have traders who have gone long from that US session. Just draw this extended out for a trend line. And currently we see that traders who are long would most likely have stops somewhere underneath of the 200 region. Again, this market is possibly consolidating for another measured leg up. We have profitable trades sitting from Thursday's shorts. The high of the day has been taken out already, and the market has protected that at this stage. So we're inside of Friday's range, which means we may find support somewhere around this 100 level in these lower pins. If that was to continue, we would probably see some similar pin formations in that lower 100 pip box. Pound Canadian, again, we're still inside of Friday's range. Our 00s right now, we are holding between the 700 box. Just mark this off. The 700 box and the 900 box. So most likely we will look for a stop hunt. The market has been in a bit of a channel, possibly a final flag pattern, 3 pushes to the high. We may see this market squeeze and possibly retest some of the long trades from this morning. Currently we are in a breakout. As you see, it broke through the 100 pip box before pulling back, and now it's in somewhat of a bit of a channel trend. So this market could possibly retest Friday's highs. Currently we are an inside day. When I have an inside day, I tend to stick with the direction of the trend until it breaks one of the extremes. British pound, great example on Friday of a market that was a second day continuation. We had a fairly strong move up on Thursday. The market then broke down to the low of the 00 box before coming back up and breaking back inside of 1500, trading up towards 1900. The market in the US Open took out the high to 00s again, breaking back down inside of the high of the day and going down to the redrawn low of the day inside the 00 box again before rolling over, falling, stop hunting below the 00s, pulling back inside. And again this morning, stop hunting traders who were long at the close before pulling back inside. This 1600 area seems to be acting as support. This potentially could be a peak formation low on the British pound. So we may see this market stop hunt low before retesting profitable traders up at this 1900, 1850 to 1900 area. The market has already made a redrawn high of the day. So we'll see how that market handles the Europe-London session. Ideally, we could still get something down off of the 1600 area, stop hunt, and then a rise back to test this upper area. Similar to the other pair, we're still an inside bar here Although the market's taken out the new redrawn low, it's still inside of Friday's high and low. Double zeros, again, if we go back and look at these pairs, double zeros, Friday's high, double zeros. The pound yen currently trading between double zeros. So these markets will target double zeros. We're at the equities opens. We're looking for that first sort of 3-hour window to give us a direction of either a stop hunt or a breakout trend movement. And again, I talked about the Australian New Zealand pound crosses, removing the 50 box and just using the double zero boxes because of the volatility that we have right now in these markets. So hopefully that provides a bit of value. Again, traders, simplifying things. We talked about the equity opens, that 12 candle window, working with the high and the low of the day, round numbers, specifically double zeros. These markets trade inside of 100 pip boxes. You might be in a 300 pip box, but it will be double zeros that the market will trade between. It may extend out and stop hunt to a 50 level and do a 50 pip stop hunt before rebounding back inside of the double zeros. Use these numbers regardless if it's 50 or double zeros. You want to try and get filled as close to those numbers as possible. That gives you the best opportunity rather than once the market has confirmed your thesis. If you're chasing price, your fills will often be 15, maybe 20 pips away from the numbers, which just means you're increasing your risk and the opportunity for them to put heat or stress even on the traders who have it right. So stay focused, traders. Stay disciplined. Keep getting better. Focus on the round numbers. Have a great trading day, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.